Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be going over the only rule that you really need in smart money concepts trading, right? But before we get into today's video, I quickly want to make a huge announcement that the mentorship is officially up and running, right? And you can now purchase the mentorship through the first link in the description, right? And for a one-time fee of £100, you're going to gain access to all of the below, right? You're going to gain access to the full smart money concepts course, right, which includes videos on supply and demand, market structure, liquidity, Wyckoff, risk control, imbalance. We're breaking all of that down. You're gonna get the tailored mentorship, the weekly Zoom calls, the private videos. You're gonna get the watch list, right, where I'm breaking down my own pairs, what I'm thinking, my own outlook on the market, and you're gonna get that through the weekly call recordings as well. And you're gonna have that trading section where the members can share your forex, crypto analysis, etc. And you're going to get that one-on-one help, right? The things that the big mentorships where there's thousands of members, they're not offering is that one-on-one help, right? And I'm going to be offering that through the ticket service. So you can open up a ticket through the Discord server. Me and you can have a chat. We can go through your trades, how you can improve, etc. right? And all of this is for a one-time fee of £100, and you get lifetime access to the server, right? So that is my announcement, and I hope to see you guys in the mentorship. But without further ado, let's continue with the video. Alright guys, here I am, and now we're going to go through that one rule that I was talking about earlier, which you need, and it's almost a key to profitability, right? And it is setting your stop loss to break even and managing your trade. So setting your stop loss to break even may seem like a small thing, but in the grand scheme of things, it is, like I said, it's almost like a key to profitability, right? Because it's almost as if you're trading risk-free, right? Because when your stop loss breaks even, you've already taken partials and you're no longer going to be losing any money, right? The worst thing that can happen is you get stopped out at break even, so at zero loss or zero gain, right? But there will be, when you set your stop loss to break even, you will be taking partials, right? And let me just break that down right now. So you first of all find your trade just as normal using the strategy, right? So we've got the order block strategy, which has been mentioned countless times in my videos, so make sure you go ahead and watch those videos. And then you get your entry. Now let's say right now you've entered from the supply zone, right? And now you've gained your entry, however the entry was, you've entered right here. So the first thing you're going to do is find your first logical take partial at an area of structure or a contesting zone, right? All of this has been broken down already for the course, so make sure you check out the course. Now let's say we've got an area of structure lying over here. That will be my first take partial, right? Or we've got a demand zone over here, right? And we don't expect it to hold, but if it does hold, then that would be a problem, right? So I'm going to set my first take partial at this area over here, right? TP1, I'll set it over here, right? And when I set that take partial, as I set my take partial, right, or when my take partial gets hit, the first thing I'll do is set my stop loss to break even, right, or in a couple pips profit to account for spreads, right? So we're gonna set our stop loss to break even, or just a couple pips in profit, right? And by doing this, if we see reaction from this demand zone, first of all, we've secured a take partial, right? So that could be 25% of your trade or 50% of your trade taken off the table. And then we set our stop loss to break even, which means that we will no longer be holding in at any risk on this trade, right? Because if price stops me out at break even, nothing has happened, right? I haven't lost any money and I've gained money from that take profit number one, right? That take partial. And then from there, if nothing happens, you can continue to manage the trade, setting take partials at areas of structure and at newer zones before you take off full profit at the next area of trend or some sort of 4-hour or 2-hour low, right? And that's all there really is to this strategy in terms of the only rule that you need. It's setting your stop loss to break even at your first take partial, right? Because this will allow you to, like I said, hold trades in at risk free. Because if you do get stopped out, you'll be stopped out with the knowing that you'll be stopped out at zero loss or zero gain, and you know that you've already taken partials at however many percent you did. So if you took out 25%, and that could have been like 25 pips, right? So you would have came out of that trade taking out 25% of your trade at profit at 25 pips, and the rest of it hitting break even or a couple pips profit, right? And that is how you avoid getting, you know, stuck in any losing any losing trades. And you know, if you want to manage your risk correctly, this would be the best way to do it. Now we're going to break down that CAD JPY trade that I was talking about, where I used this exact process. So I'll see you guys there. Alright guys, here I am on CAD JPY, and now we're going to begin with breaking this down top down style, as I always do on my channel. And we're going to start off with the 4 hour and work our way down the time frames. So already what we can see on CAD JPY is that we are clearly bearish in trend, because if we check out the 4 hour time frame, we can see that, you know, there's some sort of you know, first of all we had this area of supply, right, which caused bearishness in the market. And then we can see supply continued to be mitigated, right? And we saw bearishness in this market. And then again, supply being mitigated, right? And then after that supply was mitigated, we saw new supply being mitigated, for example, over here, right? And that caused a period of bearishness. So clearly our supplies are being mitigated and, you know, they're being respected, right? And if we move on to the 2 hour time frame, so more recently, we have seen again supply being respected, right? So for example, right here, our supply has been respected. So if we're trading off a higher time frame bias, clearly my higher time frame bias is going to be bearish, right? So I'm going to be looking for those bearish trends again, and again we've got a new supply being mitigated, right? So if we follow the mitigations, right, if we follow the mitigations, clearly we are bearish, right? And we've recently seen breaks of structures here, and so that could bring about opportunities on the lower time frame. So if we head on to the 15-minute, right, and you know, what I'm trying to do is I'm trying to find a zone which I deem as valid, right, and it follows all the order block rules, right? And what I did was I found, you know, this really interesting zone on the 5-minute time frame, right? So this last up move before the down move, right? And of course there are zones, for example this zone over here, but first you know, I wanted to trade this zone because it was a valid zone and there was the extra confluence in the form of equal highs, right? And so I didn't mind splitting my risk between those two trades, or instead, you know, going all in on this trade, right? Because like I said, I'm going to be using that risk-free stop loss to break even strategy. So we've got, if we run through the rules real quick on the order block strategy, right, we've got our break of structure lying over here, and we've got the high volume, right? We've got that high volume at the order block. The order block is not mitigated, there are no wicks back into the zone, and it's pro trend, so it follows all of the rules right there. And you know, we've found that extra confluence in the form of these equal highs, that area of imbalance, you know, more imbalance down here, right? This trade right now, you know, is looking very valid, right? And so now we get into entries. So I was waiting for a lower time frame confirmation entry, and you know, that's what I said on the weekly outcast, on the weekly market outlook, right? And you know, I was waiting for the lower time frame confirmation, so I was waiting for price to tap into that zone, right? And there is a Wyckoff distribution going on here, which will be broken down for the private mentorship. But regardless, you could have traded this as a normal lower time frame confirmation zone, right? And actually, I think I headed to the 3-minute now. So what we've got here is we've got the creation of this break of structure, right? Price broke this structure, right, and it broke the structure above down here, and then again it broke structures for example right there. So with these break of structures, we know that there is a valid POI to be entering from, and we're on the 3-minute now, and I found this last up move before the down move, loads of volume break of structures there, and it follows that higher time frame POI. So now what we can do is we can just simply set in our entries, right? And to be realistic with you guys, I set my stop loss above this high, right? Because I knew that price could, in fact, you know, take out this high and give us a mitigation of this larger supply zone. So to stay safe, you can set your stop loss above that high, right? And then in terms of targets, we can set our targets at you know, our larger take partials, you know, this area of liquidity. So we can set take partials down there. And then daily lows, 4 hour lows down there, right? We can set our one of our targets down there around the 3-minute time frame. And what's it called? So here's the entry over here, if I remember correctly. And yeah, that was my entry on KJPY. Now the RR should have been 1 to 11. I think it's because I'm using a different broker to what I'm on right now. But if I quickly show you guys what the RR was on this trade. So yeah, so that one right there was 1 to 10, and then the re-entry we caught was a 1 to 12, right? But if we just continue with the breakdown, and we'll just say for now that this was a 1 to 10, because like I said, it's not the broker that I'm usually using. So yeah, we had this, right, and it was running in right there, and now we're waiting for that first take partial, right? And you can set your first take partial at this area of imbalance right here, right? So if we just drop this area of imbalance, and we know this imbalance has to be filled out, right? We know price has to fill out this imbalance, right? And so what we can do is we can set our first take partials right here at the bottom of this imbalance, because we expect price to fill it in. So my first take partial will be here. Now with that first take partial, if we can make that visible, so my first take partial is there. Now with that first take partial, right, so price taps me in. Oh, I've done that wrong. One sec. So price taps me in right there, and then we have the mitigation of the imbalance, right? Look at that volume increase. Now I've set, that is my first take partial right there, right? At 20 pips at 1 to 4, my first take partial. Instantly what I'm doing now is setting that stop loss to break even, right? And by setting the stop loss to break even if price stops me out now because of the reaction from the imbalance, it doesn't matter. I've already secured 20 pips profit. I've taken some profit off the table, and now if I get stopped out, it will be at break even or a couple pips in profits, for example, down here, right? And that's one way, well, that's the way I approach this trade, right? So now I'm holding in at this trade on risk free. Now all we have to worry about is getting re-entries, right? And re-entry number 1 could have been through this supply zone right there, because there's a valid supply zone, broke structure to the downside, right? So you could have re-entered from there, and I'll just bring in all of these re-entries, and we can just, you know, see how much RR you could have collected by the end, right? Okay, so now if we just set it to about here, right, and then we have this one over here, and you know, price will just continue to react, giving us more bearishness, and then again another creation of another zone. You could have gained another re-entry over here, right, setting your stop loss, you know, above that high, giving yourself a little bit of breathing room. Same thing we did up here, and then you can begin to set these to stop loss to break even, right? And you can begin to set this one stop loss to break even when you hit that first take partial, right? If this one there you go, it gets triggered right there, and then you can set those ones to stop loss to take stop loss to break even, right? And you know, price came close to you, so you may have been taken out at break even there, but if you didn't, you could have held this trade even more, right? And then like I said, you can target those 2-hour lows right down here, right? And that is what we did for this trade, right? And collectively you probably would have got, you know, amazing RRs if we just check that out now. So you know, if you caught most of those re-entries, or even 2 of those re-entries, okay, so we put our stop loss to break even. Regardless, the RR was, you know, insane on this trade. And so yeah, it was, you know, mentioned in the weekly outlook on the market, in the mentorship, so make sure to check that out. But the main takeaway for this video is setting your stop loss to break even and take partialing at that stop loss to break even stage. And yeah, hope you guys enjoyed this video. Make sure to leave a like, leave a comment, and I'll see you guys in the next one.